Tobacco, one of the most addictive substances on earth and one of the most profitable businesses in history. You will struggle to find a business that is capable of generating profits and returns similar to the tobacco industry. But how long can this continue? In this video, we're going to look at British American Tobacco, the world's second largest tobacco company. A single share purchased in British American Tobacco in 2007 on the London Stock Exchange will have provided a return of 198% with dividends reinvested, of course. Smoking rates have been declining globally, yet the company's profits continue to grow as it raises its prices. However, the future of British American Tobacco may be less reliant on traditional combustible cigarettes than you thought. In this video, I'm going to do a comprehensive stock review and explain whether British American Tobacco deserves a spot in your dividend stock portfolio. Hello and welcome to The Nimble Nomad. My name is Arjun and this is the channel where I talk about money and investing related tips, tricks and hacks. I would really appreciate if you can give this video a like and subscribe to my channel. You should never invest in a business that you don't understand, so today I'm going to explain the business and stock history of British American Tobacco. British American Tobacco has a long history dating back to 1902. In 1902, when the UK's Imperial Tobacco Company and the American Tobacco Company of the United States formed a joint venture, the British American Tobacco Company was created. In the early half of the 20th century, the company grew rapidly as it developed markets in the British colonies of West Indies, India, Ceylon, Egypt, Holland, Belgium, Sweden, Norway, Finland, Indonesia, East Africa, and Malaya. In 1911, after the American Tobacco Company divested its shares, it became a publicly listed company listed on the London Stock Exchange. And by 1976, it was the UK's third biggest company and had annual cigarette sales of 500 billion cigarettes. Around this time, the tobacco industry was under tremendous pressure due to the health risks involved with smoking. Big tobacco companies were liable to significant lawsuits. Advertising of cigarettes was banned and the industry became heavily regulated. This resulted in smoking rates among adults decline significantly from 46% in 1974 to 16% in 2019. Despite this, the company has seen its profits and revenue grow as the company has increased its prices to counteract the loss in business from the falling cigarette sales. However, British American Tobacco was not wholly reliant on tobacco for its revenue, and they had acquired or had ownership in many different businesses over the years. In the 1970s, they acquired and owned retailers Argos and Saks. Argos, which till date sells consumer discretionary products, and Saks Fifth Avenue, which is an apparel retailer. In the 1980s, it set up an insurance business which made it the UK's largest insurance group, which it later divested in the 1990s. These businesses altogether were eventually completely divested as the company sought to consolidate and acquire brands within the tobacco industry. More recently, the company has invested in and acquired e-cigarette manufacturers and in 2016 launched tobacco heated products in Japan called Glow. This is an area of focus with the company's CEO Jack Bowles is set out as a key priority and focus area as part of the 2020 strategy, as the company seeks to move away from traditional combustible products to lower risk products. So what does BAT's business look like today? British American Tobacco provides cigarettes and other tobacco products worldwide. It is the world's second largest tobacco company. It manufactures vapor and tobacco heating products, oral tobacco and nicotine products such as snus, tobacco-free nicotine pouches, and moist snuff cigars and e-cigarettes. BAT's portfolio is divided into two parts: non-combustible and combustible products. The non-combustible segment is further divided into new categories, which focuses on vape, tobacco, heated, and modern oral products, and traditional oral products, which includes modern oral nicotine pouches as well as traditional oral products such as snus and moist snuff. The combustible segment is focused on cigarette brands which are offered under the brands Dunhill, Kent, Lucky Strike, Pall Mall, Rothmans, Newport, Camel, Natural American Spirit. Further, British American Tobacco, in line with its competitors, has initiated the launch of CBD vaping products under its Voos brand. Whilst this is a very small proportion of the business, I expect that the company will seek to grow this as a part of its revised strategy to move away from traditional combustible cigarettes. As a whole, BAT has many competitive advantages which allows it to retain market share and ensure profits. They have powerful brands such as Lucky Strike, Dunhill, Pall Mall, Camel, and American Natural Spirit, and are focusing on expanding their non-heated tobacco products through the Glow brand. The strong brand presence in its traditional combustible product portfolio promotes customer loyalty, which is really important to growing and retaining market share. Virtually all of their products are high margin, which allows BAT to increase prices and reinvest profits in acquiring new brands for growth. BAT has the ability to buy their way into new markets as the tobacco industry continues to get more competitive and prices are challenged. BAT operates globally, including the United States. In 2020, the company increased the number of consumers of its non-combustible products by 3 million to 13.5 million totally, doubling the rate of adoption of this new product category. Under the leadership of the new CEO, Jack Bowles, the company has rebranded itself to focus on 3 primary priorities: accelerating growth in new categories, value growth in combustibles, simplifying the business to be more agile. The company has a target to achieve 50 million consumers using its non-combustible products in an objective to move away from traditional cigarette and tobacco products by 2030.
Well, please don't do that.
I'm sorry.
I believe sucking smoke into your lungs will kill you.
My physicians say it relaxes the throat.
They're idiots.
They've all been knighted.
Makes it official then.
Despite BAT's strong brand portfolio and global reach, the company faces several risks and business headwinds. The company is prone to expensive lawsuits, increased government regulation and taxes, changing consumer behavior, and growing negative sentiment towards the overall tobacco industry. The most obvious risk to the company is the negative impact the use of tobacco has on the health of its consumers. Tobacco's negative health effects are widely known, and several people may choose to not invest within the company for moral and environmental effects, and there is absolutely nothing wrong with that. However, I choose to take a slightly different view for 2 main reasons. Whilst the negative effects of smoking are widely known, adults often continue to use these, and people should definitely start taking ownership for their own choices and actions. Secondly, whilst tobacco products are harmful, the plant from which the products are derived is a very easy to grow plant and provides employment and earnings to millions of farmers globally. India, which is the second largest producer of tobacco, and many of the farmers without tobacco as a source of income would be living on less than $2 per day. However, I do agree with that anti-smoking campaigns and health awareness associated with smoking should continue, as they are important public awareness tools and means of education. Now let's look at the financials of the business. 88.3% of BAT's revenue comes from combustible business, 11% from the non-combustible business. So BAT is still very heavily reliant on its established high-value combustible brands for majority of its revenue, despite efforts to diversify into reduced-risk tobacco products. BAT's revenue over the past 7 years has been steadily growing from $13.9 billion in 2014 to $25.76 billion in 2020. In 2020, the annual revenue declined by 2.5%, largely due to the COVID-19 restrictions which were in place. However, the combustible business saw a rise of 2.8%. Whilst the revenue declined, the company increased its profit from operations, operating margin, and significantly increased its free cash flow. The company reported an increase of 32.7% of free cash flow compared to 2019. BAT reported a free cash flow of £2.5 million, up by 32.8% over the previous financial year. Over a 10-year period, BAT has consistently increased its free cash flow whilst maintaining hefty dividend payout ratios. The last 5 years, BAT has grown its free cash flow by a whopping 15.7%. BAT currently has a dividend yield of 8.5% and a dividend payout ratio of 65%, which means that whilst it pays really hefty dividends and has a very high yield, the business can continue to keep paying the dividend payments comfortably. In 2020, BAT increased its dividend by 2.5% to 215.6 pence per share. Whilst I do not smoke cigarettes, nor do I have any plans to start using nicotine products, as I am conscious that smoking can be harmful to health, I do personally think that people who smoke cigarettes often do it full well knowing about the ill effects this has on their health. Further, I personally think that BAT is doing a good job in promoting its reduced risk products and focusing on getting tobacco users to use these reduced risk products. BAT is one of my holdings within my stock portfolio, and I own 210 shares with a cost per share of £26.74 and an average dividend yield on cost at 8.07%. I plan to continue to add to my BAT position on a regular basis as long as the stock maintains a dividend yield of 8% or higher. However, don't take my advice blindly, and you should always do your own research before making any investment decisions. Thank you for watching this video. If this video helped you out, I would really appreciate if you can give it a like and subscribe to my channel, and as I will be producing more of these similar videos on stocks that I own in my dividend portfolio.